CPI, Consumer Price Index, one of the best events for traders. If you've had trouble trading CPI, or if you're confused exactly about how to read the price action, in this video, I'm going to talk about the last CPI, one of the easiest longs that I ever did. I actually sat down on my desk. I missed the initial data, took a quick review of the price action, literally threw it in Discord like, hey, yo, I went long, and made my day's profits just in one trade in like literally, 2 minutes of trading. So that's basically trading after the data is already released. A lot of people try to go into data with like all these strategies, wasting options premium and things like that. You don't need to do that, guys. The more laissez-faire that you approach the market after doing your homework and analysis, the better you feel. And that's because you're approaching the market emotionally, flat, unelevated. You don't want to come into the market with a bunch of hope, freaking out, right? A lot of these data events, people are like freaking out, like, oh, I hope it goes my way, because if it doesn't go my way, I'm going to be in the red 60 points. You don't want to be thinking about losing 16 points instantly. You want to have a very laissez-faire attitude, even for these big, data events. Of course, trading small risk. I literally just shot a video right before this talking about trading smaller risk. Man, the lighting on this is going to look so good, guys. This is going to be I love the lighting. I'm using natural light, by the way. If anybody, a lot of y'all ask me, a few people like, yo, what cameras do you use and stuff like that. The camera doesn't matter, guys. This stuff all comes down to lighting. I have a nice Edison light behind me. Might actually do a video about my setup. I kind of want to at some point. But neither here nor there. Let's talk about the Consumer Price Index and how to trade it. Oh, if you're new here, my name's Forrest. I invest in stuff. I'm a day trader. I trade futures. I'm a funded prop trader. Apex Trader Funding is my prop trading firm of choice. If you want to sign up with them, use my link down below in the description. It will give you access to their current sale. There's a code there. I'll use that code. Right now, they're doing 71% off. Once they do their 90% off sale, you can use the exact same code. That code works all the time, every time. I do get a nice little kickback from that, which is why I advertise it. And that's just the way that affiliate links work. I also put affiliate links for the cameras that I use down below. If you want to use those, I'll get kickbacks for that. And I recommend that if you are an entrepreneur or somebody who wants to, increase your streams of revenue, and you have any platforms that you're able to build, that you should start to put links to the things that you use every day, because it makes sense. People are going to buy these things anyways. So you might as well partner with these platforms. A little bit of business advice for you. Let's go ahead and jump into the charts. So we have Thursday's price action. Let me clean this up just a little bit. We'll get rid of the visible range volume profile. All my charts always look like this because I am a price action trader and I use the volume profile religiously. My screen recording it is. Cool. So let's review the setup here. Let's talk about what we're looking at on the screen, and then we'll talk about the trade itself. So we have NQ, NASDAQ 100E mini futures. I trade MNQ, which is the mini of this. So NQ is worth $20 per point. So right now you see the prices here is in the thousands, 16,000. So 1 point, $20. Whoa, I cannot type $20. And 1 MNQ is equal to $2. I trade 5 MNQ, so 5 MNQ is equal to $10. So basically trading half the size of a normal just NQ contract. Just putting that out kind of for math for anybody who hasn't traded this, right? You can see that the range on this day here was 293 points. So 293 times 20, you can see that there's $5,860 of nominal or notational value in this contract move in a day. So there's a lot of opportunity in Q, which is why I trade it most days. If when it gets too choppy, I'll switch over to the ES. Let's talk about this trade here. Some things of note right off the bat. If you're looking, you'll notice that this dip here came down right into this volume node, or what ended up being a volume node for the day. If you're a volume profile trader, you know that the auction, being able to see where people participate in the auction, is the most critical thing. I did a volume talking about how to read the volume profile, at least how I do it. This is always evolving. I'm not going to say I'm the best trader. I'm pretty good, but I'm always iterating on this. But that video, I shot it very, very recently, so it is an accurate representation of how I approach the market today. Go check that out. Also, if you're new to our Discord, it's basically, I link it to everyone at this point, because everyone's always like, what are you guys talking about? Low value nodes, high volume nodes, blah, 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 blah. Check that video out. So what happened was we had the data candle at 8:30. The market opens at 9:30, guys. So you can see here that we had a big move at 8:30. Now, there's actually a video I did about talking about fading data candles. How do you know when to fade a candle, and how do you know when not to fade a candle? Let's go to the 15-minute. Of course, it's going to move my days around here. There's two ways. So one is, here's the first question I want you to ask yourself after a data move. What are the consecutive candles after the data move energetic towards? It's going to be a little bit more of like a school lesson type of video, guys. So the candles right after the data move, where are they energetic towards? What does that mean? Think about what I'm saying. So we had a big move. The candles after that, where are they energetic towards? Do they bounce off of a price? So we made a move. We made an aggressive move down. The next candles, are they energized towards this price action. Are they squeezing here? Are we moving away from it? What happened? Well, we can see here on the 15 that it bounced away originally on the data. And then in the next 15-minute candle, we kind of came down to this price, but then we stopped above it. Now, what this tells me is that we're not energized past this price. It doesn't look like there's energy through this price. And this is getting very, very subjective, but this is actually how I think about it. So this is important, right? This is how I actually think about it. And this discretion is important when you're a discretionary trader. I don't know how else to say it, right? You have to have theories for the market that give you some edge. So I'm giving y'all like free edge here. Subscribe to my channel. Does it look like it's going to be energized past this price? So let's go to the shorter time frame to see where the volume and the price action was after that. And it keeps moving me away here. So this is the 5. We went from the 15 down to the 5, and we can see that we bounced. We had an energetic move here, and then we chopped here, and then we came down. What will happen is if they want to push it lower, and I'm telling you this from experience, you can go look at other days. What will happen is we'll go here and we'll start to flag at this price area, and then we'll move. But we didn't. Came down, we came up, and then it came down like this, almost like a double bottom bounce. I see this price action. I see this kind of lackadaisical, non-energetic move to this area because it's not squeezing into the people participating in the auction here. And I go long immediately. That's what I did. I literally woke up. I honestly forgot that it was a day-to-day. I have a busy week, so like I just didn't plan to trade it basically. But I woke up. I was like, oh, I'm gonna go long to at least VWAP. I did a whole video talking about return to the mean. You don't have to. You should watch that video. But when I'm looking for a price target here, I'm looking for at least VWAP, which we can see is here. But really, I'm looking for them to erase this move. So the beginning of this move was here. You see it wicked up, and eventually you see that we did erase this move here at 9:35, right after the open. So that was a great trade. I got my entire day's profits just on this one long. We can see here that in terms of opportunity, this was 140 points from the beginning to the bottom. It's a very, very simple trade. So it's a combination of two things. It's a data candle return to the beginning of the move. A lot of these data candles, they like to erase the move, and there's some narrative and stuff I can go into for that. But in general, data candles, you want to see if they're going to erase the move or if they're going to trend. I call this fading the candle, where you're looking to reverse the candle. So you look for it to come into a primary level. There's camera levels down here as well, which aren't on this chart. You can see here that this is also the beginning of a node. This is a volume shelf here, right where they touch. Go figure that they went and they seeked out this liquidity. They went and they seeked out these people in the auction. The higher these bars are, the more people there are in the auction here. Less people in the auction here, more people in the auction here. They went to where there was participation in the auction, got that as a buying opportunity. They used these people as liquidity. What happened? And then we went and we erased the move, right? Damn near erased the entire move. We can see that there was some participation up here. This was also a return to the mean. So I was looking for at least VWAP, but I called out in the Discord that they're probably going to erase this move. So I held a runner. I took most of my profits here about this price, and then I held just one contract. So I was trading 5 MQ, took 4 off, and I held 1. Why? Well, honestly, the main reason that I took the 4 off is because I just woke up. So I said I woke up and I slapped that long. It's a good trade, but like doing that, guys, honestly, like approaching the market like that is not the best idea. I'm gonna keep it 100 with you. Made money. It's a great trade. If I had been on 30 minutes earlier, I would have held the entire position or probably trade larger position, honestly, but I didn't. Still a good trade, saw the trade, caught it. I managed my risk appropriate to the situation that I was in, which is I just literally rolled out of bed and hit buy. So that was the trade. That can be your approach to most damn near every data event. Why does that happen? Why does that happen? So many of you guys think about news as actual news in the market, but that's not how the market works. The market is an auction. The people who are buying at this price are buying at this price because they think it's a good price to buy. The only thing that matters. The news, macroeconomic news, does not matter. If I buy at this price, I expect that at some point it's simply going to be higher than this price. It's such a simple thing to say. It's so cliche. It's like a go figure duh type of statement. Yet people still look at the news and try and interpret price action across a 6-hour time frame, 6, 7, 8 hour time frame in the day based off of a macroeconomic news event. Okay. If I own 1 million shares of Apple, it doesn't matter what Apple says on their news conference today, unless they say they're shutting the company down. Okay. And you have to realize this price action, people hedging into futures or using futures as a hedging product, or all the different reasons why this price action might be occurring. These news events are just liquidity injections. We know the market's going to move when the news comes out. That's all that matters. All you need to know is all you need to really look at is price action going into the news and say, what is the next primary liquidity target? Oh, I see a cam pivot down here. I see that there's participation in the art auction down here. I think they're going to go down and get liquidity at this price because that's the next macro node. We can do this. This is the session volume profile. One of the ways that we actually do this is we use the volume profile on a bigger range here, and we can see that the volume profile across these sessions, we can see that this node is still here. Even when we go across, this is like 3 sessions or so here, there's still participation at this price. So this price that they went to wasn't just an abstract random level. level. It was and is an area where people have been participating in the market here at this price. That's why they went to that price, and that's why they go to all of these different prices. They bounce between these nodes. That's all you need to do going into these events, is figure out where the major liquidity is, and that's probably where they're going to go. Like 8 times out of 10, 9 times out of 10. It doesn't have to be 10 times out of 10. You just need a good thesis. Why? Because if you go short, say you want to short into this price action, which I'm not a fan of playing into data. I always react to data. That's just my strategy. It's so much easier. Once the market starts to move like past this range here, I know the primary target they're going to go for. Same for the upside. Like if they get to right this area, once they actually sweep this, get past it, then it's like, oh, then I just got to look up what the next major target is. It's so much easier to react to these data and just fade them. Fading it just means reversing it, in my opinion, than to try to catch the initial move. And if my trade works out, you still capture 99% of the move anyways. The trade opportunity on the reversal is pretty close to the initial trade opportunity. That's my strategy. If you have a winning strategy playing into data, don't let me tell you to change it. Honestly, it'd be silly to listen to me if that's your winning strategy. So that's what I did. That's how I played CPI. That is a return to mean trade. Again, let's review this. It is a fade. It's a fade of this data here, and it's also a return to the mean being VWAP. What is another trade that happened in the session? Well, once we got here, literally right after we had our price target, I should have immediately reversed. I remember talking to Sol about this, and I could have taken another return to the mean trade. So what is a return to the mean trade? What is a return to the mean trade? That just means we're going back to the average of the current session. There's a few different averages that we could talk about. An average, it really depends on how you actually do the math and calculate it, but VWAP, which is this blue line here, is here. So I could have taken another trade, which would have been 50 points of opportunity there. It's $500 with 5 MQ. Immediately, I didn't, but that was a huge amount of opportunity just inside the first, 40 minutes of the market being open, so regular trading hours. But, that was about from 8:55 to 9:40, a little bit longer than that, for about 45 minutes of market time, and you're done on the day. The rest of the day honestly didn't matter. Thursday was a crazy day for me though. I played calls off the bottom. We got down to here, this major target. I called 766. That hit. It was crazy. I bought a ton of calls down here, this laddered into calls. Got like a bunch of 400 or 500 percenters. I was chilling on Thursday. Thursday was like a week of profits in a day for me, which is why Friday I literally I wasn't even trying to trade. Neither here nor there. I'm done bragging. But return to the mean. Return to the mean. Return to the mean. It's such a playbook trade, guys. You got to ask yourself, once we have these big moves and we bounce, where are we going to go? People like to buy below average prices and they like to sell above average prices. The simple example I'll use every time. If we know that a Civic sells for $35,000 and I'll sell you one for $20,000, that's a good deal. You might have questions about the mileage and things like that, but if you know that the average price is $35,000 across hundreds of thousands of transactions and you can get one for $20,000, that's a good deal. You could just immediately sell it for at least probably $35,000. You're going to make 15 grand. Same on the other side of that example. If I can sell a car, say I have a Civic and I know the average transaction price is $35,000. If I can sell it above VWAP, I know any price above VWAP is a good sell price. Why? Because it's probably going to come back either all the way or in some way to the average price of the market. That's why it's called the average. Now the market's going to zigzag back and forth across the average, and we have trend days and things like that, but that's fine. All we need to know is that in general, is this a good buy or a good sell? And you can say it's a good buy if you buy below average, and you can say it's a good sell if you sell above average. The opposite is also true, and this is important when you're approaching the market and you're getting into a trade and you're saying, do I want to sell? Do I want to go short down here? Do I want to sell far below the average price of the market? At that point, you basically have to say that we're in a trend day and you think that we're going to pin lower. Now, this is a pretty strong V reversal day, but we had a major 766 was a major level here. So that's the type of question that you have to ask yourself when you're in the market thinking about these different trades. But that's it, guys. So the two different strategies here, CPI reversal and reversion to the mean. Reversion to the mean trade will give you all the opportunity that you need in the market. If you have questions about that, of course, you can join us in the Discord. That's what I'm here for. I do this because it is my passion. I'm here to help people make money, become financially free, things like that. My name is Forrest. I invest in stuff. Hit me up either in the DMs, in the Discord, wherever you can find me. I hope to see you there before the end of the month. Again, we have a 1-month free trial. We will get you right. But in any case, thanks for stopping by. See you in the next video. Peace.